What is good, guys? It's Rey-Jay back with another video, and this one I'm going to break down what's going on with the market and some very important levels to watch for. I'm also going to be watching the market live for the last couple of minutes of market open for Friday. The market's very close to closing right now and entering the after hours, so we want to watch how this is going to move and some very important levels to look at. Now, before breaking things down about all this information, let me just mention a couple of things. Firstly, I am not a financial planner, so take none of this as financial advice. And don't forget about the Webull link. The offer ends very soon. Deposit any amount of money and you're guaranteed up to 12 free stocks. Anyways, let's talk about the market, what's going on right now. So basically in the morning, right? The morning came and the market was doing quite well. It actually pumped very nicely in the very beginning. So let me just show you that just real quick before we talk about how the market's looking from this point on. So basically, if you look at the 5-minute chart, you can see SPY pumped all the way up to 451.36. Got a nice pump up after the bank earnings were quite strong. And then we had to watch this very carefully. Now, I warned you guys in the pre-market video that it's a Friday. There could be lots of manipulations, even a possible sell-off, or the market would try to hold up. And the bank earnings were looking quite good, so I expected the market to not really sell off that hard. We didn't really sell off that hard. We're only down like 0.13% overall. It's not that horrible, but compared to how much we pumped, it did lead to some nuances. Now, here's how I'm going to be going about this, right? One of the things you always want to do is, especially if you're trying to trade, if you're trying to like watch the markets, is look at how tickers are looking relative to the whole market. The reason why SPY was not like pumping insanely hard as it possibly could have, or how it has done over the last few days. One of the reasons was Aapl. Aapl was lagging behind, as you guys know, kind of like trading sideways for the last couple of days. So you want to like have this in the back of your mind. If you look at Aapl, it's not super strong. It is trying to pump a little bit at the end. That is helping the market hold up as of right now. And then to add on to this, what you want to do is I like to look at many things at once. I mean, you don't even have to have two screens at once, but it's good to have them once in a while if you want. So I like to have, okay, a bigger time frame next to it, right? And this could be used for like scalping or looking at other things. The smaller time frames for scalping, the bigger one could be used for scalping or even like you know, medium term trades, swing trades, and etc. I specifically like to look at the 30 minutes time frame, and you can see on the 30 minutes looking kind of bearish, it's looking quite weak, and the market was basing at this 448.5 level. So that's going to be our very important support. And we got more ideas about this level just by looking at historical data. You could also notice that this is where the market was basically testing as a resistance zone, at least going into yesterday. So that's your very important level. Now, we're just 5 minutes away from close. I'm going to look at the market in just a couple of seconds. But just so you guys know, this is like one of the levels to look at. Now, on the 30 minutes time frame, you can see the trend is quite bearish right now, right? It's looking quite weak. We are trying to base around here, but it's not looking that strong. And we got this signal of weakness as early as about an hour ago. You can see it on the 30-minute time frame, got this bearish cross on the PPO. The market just started to trade sideways and started selling off more after that. This was as early as 450.5. So we already got the signal much earlier before we actually got the sell-off. But what you could do is, I'm going to hide my drawings and show you this. Look at my screen on the right side, by the way. Look at the 4-hour time frame. The 4-hour shows the even bigger trend relative to the market. So we're about to get a bearish cross on the PPO right now. As it was curling right here, this is another bearish signal that was showing that the market was looking weak. So the 4-hour was looking weak. The 30-minute confirmed it. That told us that puts were the way to go for today, or any short position that you had wanted. And then the market also is trying to base around some of our very important EMAs. I mean, if you look at it, I think it's the 1-hour time frame where I was looking at it. Not the 1 hour, sorry, the 30 minutes time frame. So we were trying to hold above like the 30 minutes 50 EMA just for some time. But it didn't really hold above it for the majority of the day. We came a little bit below it before bouncing right back. You could see how the bodies of these candles are just like around it, but then we have wicks below it. So that was another signal of weakness. But now we're in the final minutes of the market. What I would do is, what you would do is you're going to be looking at the trends. The bigger trends give you confirmation of which direction the market's going in, right? The 30 minutes and the 4-hour are just two very simple ways to do it. I also have a stochastic. You could use momentum indicators and other things as well. Your RSI could be helpful, and you could also look at your different EMAs and VWAP. Always have them in the smaller time frames. But for now, if you want to use VWAP, that could also give you more insights. We are well below it as of right now, at least right here. Now, looking at it, okay, I told you the market was looking bearish, right? Looking at the 30 minutes and the 4-hour time frames, the bigger time frames looked more bearish. We already got those signals a while back, right? It's not like I just like barely knew this from the very beginning. We had these signals hours ago that the market was looking this way. So now that we got those signals, you could have played puts like right here off these rejections, maybe off this VWAP rejection. That could have been another good put entry. For example, a short entry could have been like right here for a trade. That's another example. VWAP acts as a magnet where the market could reject or even like kind of move towards. So now that the market was on this downtrend, we clearly got these signals. What are you going to be watching on the 5-minute time frame? You could use that to time your entries and exits for scalps or intraday trades, right? So we had that opportunity right here beforehand, and the market started to sell off. When the market's very low at these levels, I'm not going to be watching to get puts way down here because, look, you have to remember that 448.5 was our low of the day. We have some support around that area. It's not smart to just be shorting super hard at these low levels. That's way too late. You want to time it by projecting what's likely going to happen and watch to see if we got a rejection or if we broke above VWAP. We got a rejection off of it. That was a very good short entry position. So that was your signal, right? When the market pumps too hard, some people like to be like eyeing puts basically. That doesn't mean short the market every time it goes up. That's not what I'm saying. I'm saying you're going to have those in the back of your mind and look for possible opportunities for rejections during cool offs to enter the shorts. But if the market's like dropping too hard and needs to like bounce or something, that could be another opportunity to enter like calls, right? So you want to be watching for an entry for a position based off what you're forecasting. How are you going to forecast something? Well, you have an idea of what the bigger trend is. By looking at the bigger trends, we know the market was looking bearish and we saw this sell off potentially happening. Now, for the last few minutes, the market is once again, I mean, it tends to be very crazy at the very, very end. I don't really trade during the last like 5 minutes or so. We're at the last minutes that the market's open, the last few seconds, market's trying to go up and we're about to close and the market is closed just barely in the red. I mean, it wasn't even that bad. We're still at 449.27, not even that bad. Pretty decent overall, but it did sell off a bit from the 451 area. So we still saw that. But what could we infer based off this close that we saw? Well, the first thing is SPY was, I wouldn't use the word super weak to describe it because we were only down like 0.07% and the sell-off was completely normal. It is a Friday. That's what tends to happen. The earnings for next week are going to play a big role in dictating it, but we're going to talk more about that later on. To add on to this, I just wanted to mention that SPY is looking like this. We just saw this thing close in real time on our 5-minute time frame. But what you could infer from this, just even if you're not even like watching every single stock out there, we could see Aapl barely close green. It showed a little bit of strength at the very end, but it still is stuck in its range. So if Aapl tries to rebound next week, this could help the market to some degree. For now, it's still kind of stuck, but I'm going to be watching it very carefully. But one thing I can infer is Tesla's looking a lot better than before. It's getting a lot more volume than before, and it's holding up very nicely, up 1.25%, approaching earnings. I'm going to make a video about Tesla tomorrow alongside like NVIDIA and a couple of others. Tech was a little bit weak. It closed just barely in the red. We could see we got this rejection off our zone. So here are my support and resistance levels for the triple Q. I'm going to switch to one screen now. We don't really need two screens at this point. But if you look at the triple Q, it came up above our resistance zone, which is around this 382 level. Just went a little bit above it before breaking right back down. You can see it was testing 382 as resistance before it started to break down. It came all the way down to 378 as its support. It ended up breaking down at the very end. It failed to get right back up, but it closed above 379, which is like not that bad, but overall the trend was favoring the bears. It didn't really do anything too big. So we'll talk more about this later on. I'm going to make another video and talk a lot more about some big opportunities in the markets for next week. Look at Microsoft. I mean, it also sold off with the market, came all the way down. Got a very nice pump in the morning first and then started to sell off. So that was very interesting to witness. Same thing with Coinbase. It followed a very similar trend. AMD managed to close green barely. So that's a decent sign for it. It came down pretty hard after this monstrous run up before it came right back down. And in the process of it dropping, and also from this like divergence right here with the RSI, which suggests that we could start to see upside later on. It may start to rebound at least going into next week. That's a real possibility. And for the majority of the market, the dollar ended up coming up. That's part of why the market sold off. The dollar is starting to show a little bit more strength than before, but overall, I would not use the word strong to describe it. It still is only at 99.96. It still is at a very low level compared to before. Look at the daily on the dollar, it just crashed really, really hard from its very high levels. That's part of why the market was basically holding up as well as it has been. The dollar played a big role in that because of the Fed's monetary policy. The 10-year treasury yield is also up, so now it's kind of acting a lot more like normal. When this thing goes up, the market tends to drop a bit, and we're starting to see signs of that once again happening again. So is this thing about to start pushing up to fill these gaps? I mean, it's a possibility, but I'm not really counting on it for now. It depends on if it could break above the 5 EMA or not. If it does so, then that could be a bearish signal for the markets. For now, not really seeing it. Amazon held up and Meta was looking a little bit weak. A couple of days ago, I told you guys Meta was looking kind of weak, but then yesterday I said that it really depends on the earnings and etc. But I was still a little concerned that Meta could pop and end up dropping. If it broke 316, we could have seen like 320 plus. I think it's eventually going to get there, of course. But notice how it came all the way down to our target, very close to like 307. The more bearish case played out since it broke below our support. So let me just show you what I'm talking about on the 5-minute time frame right here for Meta. This was a really good shorting opportunity too. So for Meta, basically, right, we formed our top right about here. This was like yesterday, this like 316 area we broke down, and we started to test 314 as the next zone. This 314 area, you could see it formed like these tops, failed to break out. It was looking kind of weak before it really started to sell off. And our break below 312 was our confirmation of like this 310 test. Break below that, and I told you 307 is going to be the area to watch for. That is where Meta went to, this 307 area. And so far, I mean, it was looking kind of weak, but it's not the end of the world because on the daily chart, it's still strong. On the bigger time frames, it still is quite strong. When you zoom way far out, I do apologize if this is kind of small because I have to show this very zoomed out. We have this giant gap on Meta all the way up to this 320 area. I think Meta is going to fill that gap soon. This drop was completely healthy, right? Because it's been pumping so hard. It's going to eventually go up to 320 in the future. Maybe it cools off first before it finally does that. But if it does cool off, this could be another buying opportunity on it. All right. So that's basically what I'm seeing for the markets for now. We did see some weakness so far, but there's not enough confirmation for us to turn really, really bearish. Now, yes, we have this like divergence that form a negative divergence. And we do have these gaps down here on the daily on SPY. We have this gap down here to 446, another one all the way down to 442. Earnings will dictate how this thing moves, but it has been pumping a lot, so even a small pullback would be healthy. If it breaks below the 5 EMA, it's going to likely fill this gap all the way down to like 442. If it breaks below 446.32 or 445, around that area. So that's going to be your confirmation. That's going to be your pivot point. For now, watch this high and see how it moves going into next week. And I'm just going to be very patient with it. Anyways, I'm going to talk more about NVIDIA and Tesla for tomorrow, but that's what I have for this one. I hope you guys found some value in this when it comes to how you're trading, how you're looking at the markets. You always want to be paying attention to the bigger trends. Even if you're scalping, it's important to look at the bigger trend just to understand the direction the market's in and to understand where momentum is favoring, right? That's very important. And that's why I like to look at the 4-hour, the 30-minute time frames for the bigger trends. And for scalping or like doing anything small, you can use the 3 minutes or the 5 minutes time frames. Those work very well as well. All right. So watch your different EMAs, whatever strategy you want to use. I like to use the 15 to 200 and then the 5 EMA. I also like to use different trend lines, supply and demand, and all these different things. And I really hope I brought some value into your guys' lives. I want the best for everyone, so take care, enjoy the weekend, and I'll see you guys in the next one. The market to the moon is the long term is still incredibly bright, and peace out.